All right, so let's begin the show. And mis-selling in financial product is not a new story. Not that regulator has not taken stock of the situation, or the industries or the stakeholders have not done anything yet. But the truth clearly signals on the fact that a lot more needs to be done. Now, having said that, there's an alarming survey report that has once again gotten the spotlight on the issue of mis-selling. In fact, going a few steps further, this survey reveals facts about how sales pressure and basic knowledge gap is one of the core reasons that leads to mis-selling and misinformation of financial products. Now, this survey is done by 1Finance, and to discuss more on this, I have with me Harshvardhan Roongta, CFP, Roongta Securities, and Kanan Bahl, Chief Director, 1Finance Magazine. Hi, good evening, and welcome to the show. Kanan, I'll come to you first because we really need your help to decode the facts and findings of this survey involved. And, it really seems that it's just not a case of incompetency, but misinformation leading to sales pressure that, after all, drives the sale of investment products, leading to what we see as an investor losing all of their hard-earned money. So the key findings of the survey from you first.
So first of all, I would just want to give a background about the survey. We interviewed around 1,655 bank RMs across 20 scheduled commercial banks in 15 states of India. All of them are client-facing RMs who are directly responsible for having some or the other targets of selling financial products. The key findings are that, 57.56% of them say that we are told to sell products even if they're not correct for the customers, or even if they're better products, there are better products for the customers. So these are the ones who came out and said this. I am sure this number is higher because many of them would not have been comfortable in saying this in as many words. Now, coming to the basic knowledge gaps, Kavita, the basic thing, first of all, in mutual funds that we are taught right from the beginning is mutual fund unit kya hota hai, and then we are told the difference between a direct and a regular mutual fund scheme, right? 85%, more than 85% of them, in fact, do not know the basic difference between a direct and a regular mutual fund scheme. 98% of them do not understand the difference between nominal and real rate of returns. 75% of them do not know the tax benefit of investing in ELSS. Close to 75% again say that we'll purchase a ULIP product over a mutual fund because, for all that reason, basically they're not aware of what is better for them. So how is it possible that they can sell good products to the customers? As per IRDAI report, 53% of the insurance premium that is collected via private insurers comes through bank assurance partners. So we can say that more than, almost half of the financial products are sold through banking channels, especially in insurance. So you understand the impact of, mis-selling, or, basically selling without understanding that these bank RMs are basically rendering to the end customer. So this is a macro problem at a country level.
No, that's a very crucial point that you also highlighted, and the data and the survey highlight is actually very alarming. Also, Harsh, we are talking about times where we are putting efforts, like you and I have been putting efforts in educating financial literacy since a very long time. And banks, being the financial institutions that are highly penetrated, one of the key drivers of financial development in the country, clearly, they seem to be lacking the basic fundamental towards the common goal that all of us have, in fact, as a country, of achieving financial literacy. They are the pillars of financial inclusion and literacy, which ultimately leads to financial freedom in the country. And this kind of survey and the data that's coming up is very shocking. Do you also have real-time incidents where you can share, or how close to reality, according to you, is this survey, Harsh?
So, well, Kavita, with regards to my own experiences, of course, till today, I receive calls from my banks forcing me to buy insurances. I mean, forget about knowing anything in the product range, etc. I mean, I have my own bank calling me up during month ends and telling me that, sir, please pay 5 lakh rupees as a premium, etc. because we have targets and we are requesting for help. I mean, that's the language. When I say that I don't want to buy any ULIP, etc., this is a help that we are requesting. What form of help is it? Anyways, I'm not getting into all those details, but there are n number of cases that I am personally aware of where banks have kind of exploited their customers. I'm using the word bullying and exploitation. So there have been 2 or 3 instances where my clients have asked me to accompany them to the bank only to negotiate and buy the least worst product. I mean, they're saying that just please come along with us so that you can help us select a product which is the least toxic for me. I know everything is not going to suit. I mean, they're not good for me, but I still need to buy because I have a bank limit. I have some relationship loans, etc. from the bank. You walk and a retail investor walks into the bank branch for a locker. You don't think that they've been exploited to buy some, some insurance products? I mean, this is a known fact, and not that RBI is not aware of it, not that SEBI is not aware of it, just that there is nothing anybody can do. And you mentioned a point, Kavita, saying that banks being the central focal point of financial literacy and penetration. Well, you know, you walk into a bank today and ask for some banking services. In fact, you'll notice that we're not going to be serviced for any banking services at all. And all these guys are redirected to selling some insurance and mutual funds and something or the other. The banks have lost the meaning of a bank. You walk into a bank, you want to get something done, no banking services and no employees are available to do any banking services, but they are there to hound you to buy something or the other in the ULIP space. So one thing that you must also understand, and I hope that people understand, everything that is yellow and sweet is not mango, right? The papaya is also yellow and sweet, and so is mango. They're two different things. So just because it's a bank and an employee doesn't mean he knows how to handle financial instruments and investment-oriented advice as well. So banking services are totally different, and investment services are totally different. A bank employee is rightly, as per this survey, they have been pressurized, they have been forced, and we have seen some videos in the past where on a webinar the manager was abusing their staff, saying that why aren't you able to sell something? I think it was one of the banks that we had even seen on Twitter. That video went viral. So these are facts. I mean, I don't think we need to talk about it. The only problem is that these incentive structures, the commissions that banks earn, the moment you stop that, then I believe all this mis-selling will stop, and finally people will get the banking services from a bank and not something else.
So Kanan, do you agree with this? Is that all? Do we really need to get the banking structures and especially the sales part structure, the incentive and commission structure right? Is there anything more to it? Because I'm sure when you were doing this particular survey, you must have reached out to these financial institutions. When you must have highlighted these kind of issues, what was their response? What is that one particular thing that you might just want to point out that's missing? Is a major miss maybe?
Right. So, Kavita, I would like to highlight the requirements that other advisors need to have. If you talk about a mutual fund distributor in himself, a mutual fund distributor needs an NISM certificate, right? And then they are subject to this certificate. They are subject to passing this certification in every 3 years. Talking about investment advisors, they have to pass 2 NISM exams, and they have very stringent documentation requirements for whatever advice they render to their clients. And if I do not talk about the recent update that came, but before that, you needed at least 5 years of experience to be an investment advisor. Now, the bank RMs are left in open. They are just given sales training. And while there may be on paper some technical training given within the banks, but this survey completely exposes that reality that unfortunately that training is not that training is not passed to them. 85% of them not knowing the basic difference between a direct and a regular mutual fund scheme is definitely alarming, right? So what is missing is, the checks and balances that SEBI and the RBI need to work together on, and to basically they need to work on having a minimum educational requirement, or if not educational, then at least certificational requirements like these, and then make sure that periodic audits are concerned periodic audits are conducted, and there's a very good check system, audit system conducted on the quality of advice that is given, on the product suitability that has been given to the client, to the bank customer or not. And this is only something, something that comes from the top is only going to solve this problem.
No, you're absolutely right. And Harsh, because, okay, so for example, I do a lot of cybersecurity shows also. Anytime I have a cybersecurity show, I have an expert with me and we are talking about a new case. We're talking about a new kind of hack. We're talking about a new kind of scam. So a lot of innovations happening over there. How much do you expect a user or a consumer to be aware of all these things? End of the day, everything just lies upon on the legal authority, on the government agencies to actually act upon and build a strong and a robust infrastructure around it. So having said that, in the same way, the onus over here just can't be lying on the consumers. Yes, we know people are not financially literate about it. They fail to understand or go in depth about financial instruments or their investment choices for that matter. Just for their sake, how can they filter out? Because all of this also leads to following advices or advisors or agents who mislead you. It's a typical example of all of this. How do you really filter out the right ones and the wrong ones here, Harsh?
Two kinds of cases that I'm referring to right now. The first one being that the investor or the individual is well informed, but he's been forced to buy. Okay. So there are a whole set of people who know that they don't want to interact with the bank with regards to ULIPs and all those policies, insurances, etc. But the fact is that they have banking limits with them. The fact is that they have certain loans that they are going to be taking in future, or they want a bank locker, etc. And there is no other choice but to give in to these extortions that have been, subjected to. The other set of investors or the individuals that we're talking about are those people who are unsuspectingly, gullible. So, say for example, in a tier two, tier three, or a village, there's a bank branch over there. The bank enjoys a certain level of trust, right? So, if I was living in a possibly a tier four city or a small town where I'm going to a particular bank because I trust the bank, by the virtue of me trusting the bank, I take the bank manager and the employees to be of equal caliber. And I presume that because there is a bank manager saying this, because there is a cashier saying this, because there is an employee of this particular bank saying this, it must be true. So these are two sets of people. The first one is clear case of extortion and bullying. The second case is mis-selling and cheating. Now, what happens is, how do you correct this? So, one, in case of bullying and extortion, now if I want a bank limit, I want to keep my relationships with the bank, I have no choice. I have the wherewithal to complain, but I am not going to complain. The other part is where these guys are gullible, where they don't understand, they trust the bank and the brand, and the employees are exploiting that. Now, how do you fix this? And at the same time, the government has one problem of saying financial inclusion. So banks have the reach; they can go to the nook and corner of the country. So they want this reach to go through. So how do you strike a balance between the two? Very clearly, the brokerages, the commissions are the driving force. Okay, so if you are talking about a bank earning a fee, so the audited results of the banks, you will see what kind of income they're generating from third party distribution of products. There has to be some logic behind that. If you're saying that I'm earning an X amount, and this is also a fact that they have their distribution of the parent company. So probably a private bank who also owns a mutual fund will have the largest sale of their own mutual fund. So these are questionable actions. I mean, if you were so interested in the consumer, is only your mutual fund, your parent company's mutual fund, the only fund which offers you the best products? No, that's not true. But it's a clear collusion where you're trying to promote only a group company's mutual fund. So these are questions which regulator needs to ask, and that is a starting point where you can start striking down. And there is where you will see that this mis-selling will stop if it comes from analyzing the macro data and then bring it down and having no targets to your sales, to your banking staff. Let them please do banking activities, which is the primary purpose of their employment.
Kanan, one last question to you. Where can an investor go and complain just in case a victim of such kind of a mis-selling?
So as far as insurances are concerned, you can go to the IRDAI website and lodge a complaint. If it is related to banking services in particular, then you can lodge a complaint with the RBI Ombudsman.
Reach out to them directly, or first we have to reach out to the stakeholder, the company, wait for a response from them, and then reach out to the ombudsman or the regulator? What's the process, Harsh?
See, there are two elements, Kavita. First element being that you've been forced by the bank to buy something. I walked into the branch to do a banking transaction, and I've been hounded by people to sell something else to me. So that is the first step that you'll complain to RBI saying that, look, hey, I wanted a loan from the bank, I want a locker from the bank, and they're forcing me to buy something else. So that's the first step. Then the question arises that if you've been sold a product which is not suitable to you, so a retired person being sold a ULIP policy most certainly is not something which is fitting into the requirement of the retired person. So that is a mis-selling complaint which you will file with the RBI banking ombudsman. Now the process as laid down is that first you'll have to contact the nodal officer of the bank. But invariably you'll find the answer of the nodal officer, everything in sync with what the bank's policies are. So I don't expect too much of relief from the internal grievance redressal mechanism. Eventually, you'll have to file a complaint with the regulators, sector regulators like IRDA or RBI.
All right, so a lot need to be done in this particular domain, but thank you so much, Kanan, for being on the show and helping our viewers understand every aspect of this particular survey and being there for their guidance. Thank you so much, Kanan.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.